This is the SPX market map. A look ahead at February 3rd, 2026. First, a quick look in the rear view. The market closed Monday, February 2nd at 69.76. The gap down at the open reversed and price moved toward a high at 69.85. Several hours of chop followed with a daily high forming near 69.90. The daily range exceeded the 21-day average true range of 65 points. At the close, the index was up about 37 points. Let's look ahead to what might be next. The structural roadmap for Tuesday, key levels for the upcoming session. The levels that show up on net market maker positioning include only the 1 DTE expiration for tomorrow. Some of the positions are significant, some not so much. The size of the positions influence market makers, let's call them dealers, hedging concentrations of options gamma at different strikes. The net market maker position chart confirms the structure visually. The chart doesn't show what will happen, but it shows where dealers are more inclined to act, and those hedging flows help define the road ahead. Today's close is shown in red. Let's have a look at the upside first, the upper resistance zone, 70.15 to 70.40. Dealers are long calls at 70.15, not significantly large in size, but 70.15 is the strike at the top. The resistance zone marks the upper bound for anticipated price action for tomorrow, where price action could slow or reverse with an increase in volatility. The map shows decreasing positioning at 70.25 and 70.40. Next, let's take a seat in the stadium where 0 DTE traders will be placing their bets. The active trading range, 69.45 to 70.05. This range is defined by the 30-point straddle. Two large strikes form the center of this range, 69.80 and 69.85. Price action within the active zone is going to be driven by existing structure colliding with real-time 0 DTE flows. Now let's flip to the downside, 68.80 to 69.40. This is the zone below the active trading range. Dealers are short the 69.30 strike. A break below the low of the 1 DTE straddle would put price trading in this range. Finally, the lower bound, 68.50-ish. This zone marks the lower bound for anticipated price action tomorrow. 68.50 is the largest strike on the map with about 4,100 dealer long puts. Think of this strike as structural support for the session. Analyze the visual information in the net market maker position chart and let the structure do the heavy lifting. Watch the flow to be in the know. And thanks for watching.